Hi. Me again, guys. SK. Welcome to my weekly market outlook. Now, we are in the July week 3. So, we are talking about July 11 up to July 15, which will be our trading week for July week 3. So, again, I would like to welcome you all to my weekly market outlook. So, let's just get started right away. What happened last week? My. What happened, man? What happened to Brexit? Where did Brexit go missing? All were missing. Market was purely bullish and we did not see any other setback in the market since for the last 2 weeks. Alright. Brexit did not play any role anymore, and we had the market moving on last Friday due to the NFP numbers. We had amazing NFP numbers, thus the market has moved a lot on last Friday. Now, if I were not watching the market for the last 1 month, I won't even know that such thing called Brexit took place based on the chart. Nothing actually shows that we had a huge issue, a huge news, which is Brexit. Now, after the NFP, the market showed that it is actually happy with how the economy is growing in US. The market jumped after Friday's report, and now as well the US dollar as equally has jumped as well. Now, where are we this week? What is going to happen? What happened last week? Let's just take a look at it by looking at our SPX chart yet again. Now, look at this chart over here. This is again as usual our SPX weekly chart. So if we were to look at it, as I said last week, I called for the market to be at least flat and downward biased. That's exactly what took place till Friday. Alright, till Friday before the market opened. You could see over here the 3 days the market opened lower, then it tried to open lower again on Tuesday before moving up, and then on Thursday it closed flat again, until when the market opened on Friday. Due to the jobs report number, the market took a huge jump. Where did this huge jump bring us to? So let's just go back to our weekly chart and look at it. Where are we now? Where are we is amazing to be seen right now, because we are actually at our almost historical high. If you were to look at this, our historical high was 2134, which is back in 2015 May. But over here right now, on last Friday, we went up till to the highest point of 2131, just 3 points short of our historical high. It actually closed at around 2129, or actually it says 2130. Now this is really amazing. Alright, despite all the warning signals in the market right now, market continued to push higher and higher. And right now we are almost at historical high, which is our last resistance in the market. Alright, so that's about just the overview of what happened last week. Let's go back to our usual trend in the market, support, resistance. Did anything changed after last week? What so on? Alright, now let's get started. Let's get started with our usual market trend. So if we are looking at this chart right now, it's pretty obvious that we are still in the trading range as I have been mentioning all the weeks before. Alright, so what is the main thing right now, right today, is that we are exactly at the resistance that we have drawn earlier in previous weeks. So we are exactly there. You could see over here. So this is where we are. What happens this week could prove to be very, very interesting to the market. Because if it breaks beyond this, it means we are looking at new historical high, and there may be a continuation to all the 7 to 8 years of a bull run. Alright, now, so we have seen the trading range. So it's pretty much still within the 1870 and 2130. But we are on the verge of breaking it right now. In terms of support and resistance, everything remains the same as previous weeks. We have the last resistance right now for the SPX. So if that is broken, then we do not have any more resistance. The market is all the way up and up. So now, what are the things that we can look forward to? What are the warning signs? What are the things that we can expect in the market for this coming week, which is July week 3? Now, let's just take a look at it. As for last week, as per Friday's close, we saw the market closed at 2130. For this week, July week 3, I'm expecting the market to open higher still. Alright, because of the momentum carried on to this week, especially with Asia and Europe is also on the positive territory. So I'm very sure US market will actually open with a good gap up as well. So the market will open upwards, but what happens after that could prove to be very interesting and could decide on where the market goes for the next half of the year. All right, because if the resistance is broken, there are talks that it will next approach up to 2200. That's what the next target for SPX will be if the current resistance is actually broken and a new bull run is actually get started. But if it breaks beyond that, then it means we are at a double top. This is our first top, and our second top will be here if it breaks beyond 2045 and beyond. Alright, what is my outlook for this week? I'm still looking at a positive close for this week. Yes, it means that the market is going to open higher, and for the week it is going to close at a historically high level. Why do I say so? It's because this week marks the beginning of our earnings season. So when earnings season begins, more often the estimation for companies' earnings are been very low. So when the estimation by all these analysts are low, more often these companies are able to report much better number compared to what the analysts estimate. So when this actually takes place, the market will continue moving higher, especially this week when we have banks reporting. We have JP Morgan reporting on Friday. So these are the kinds of report that could actually move the market, because remember, financial market carries a lot of weight in SP 500. So if the financial market moves and the bank starts reporting good numbers, we could see the market to move higher. So despite all the warning signals, despite the market being at resistance, I'm going to call for the market to close slightly higher for the week, which means we are going to look at the historical high again. Now, of course, this is very much dependent on what does the banks reports, right? Because starting from tomorrow, which is on a Tuesday, that's the day when the earnings season starts for this month. So we have Alcoa reporting tomorrow, and I will actually let you all know shortly what are the other companies that are reporting. So now, that is my outlook. So that is what basically I'm going to share with you all. All the other warning signs still remains in the market as per what I shared in my video last week. Alright, especially if you were to look at the MACD over here, the MACD histogram is still pointing downwards despite the market moving higher. But the main point is definitely the bond. The bond market is exactly showing divergence that has not been seen for a very long time. So if you were to look at this, the red line shows the 30 years treasury yield, alright, treasury bond yield, and as well as the blue line shows the S&P 500. So in actual economics, when the S&P 500 moves up, the 30 years treasury yield will also move up together with it, and when the market falls, the yield drops as well. So in another way, it means when the S&P 500 moves up, the bond price moves down. When the S&P 500 moves down, the bond price moves up. So basically over here, the bond yield should actually follow pretty much the S&P 500 direction. Thus, if you could see over here, when the market dropped, thus the yield as well, which is the 30 years treasury bond yield. And the same goes here as well. When the market dropped in 2008, the yield dropped as well together with it. But over here, if you were to look at what is happening right now, the yield has dropped to multi-year low. It's a low that we have never seen before. But where the market is at historical high right now. This historical high level where S&P 500 is right now does not go along with how the yield should be actually. I do believe that this kind of yield is actually giving an early warning signal about where the market should be going and where will it be for probably 1 to 2 months from now. Be very careful on any trades that you're taking over there, especially if you're taking any long positions, because of this divergence that we are seeing right now in the market. All right, so that is the biggest warning signal that I am seeing right now. So this yield and this S&P 500, eventually it has to come along together instead of it moving in the opposite direction. It wouldn't last. I do believe the S&P 500 will correct, but probably by end of July or early August, that's the time we are going to see S&P 500 to correct. I'm just going to give a slightly higher overview about all the other warning signals that I have actually discussed in my previous week videos. For an example, gold, I did mention that gold did a breakout. So the breakout has been consistent As per for last week, we are seeing right now the gold continues to move higher. So this is a typical breakout pattern. And just a special mention about oil as well. So if you were to look at oil market currently, let me just get the code up. So if you were to look at the oil market currently, we pretty much had a big sell-off in the oil market for last week. This is the one. All right. And then for the last, so if you were to look at the oil price right now, we had quite a downward move in the market. So this is the one. And right now, we are probably for this week, we could see a rebound. All right. Another reason why I'm calling for a market to rebound or probably close slightly higher this week is because this is monthly options expiring week. So when monthly options expiring week takes place, there's a lot of short covering positions that takes place, especially in S&P 500 and as well as in oil market as well. So this could move the market again, and more often it will actually move the market higher. So I'm looking for oil price to rebound from here. So this could be a huge rebound where this could be the beginning of the commodities rally. All right. So that is pretty much about oil market. So we have discussed about the yield, we have discussed about the gold, we have discussed about the oil. Now, just before I end the session, let's just take a quick look at these sectors. All right. As for last week, what we have seen is on Friday, when the market moved high a lot, all the sectors has moved together with it as well. We do not see any single red sectors for last Friday. But if you to see for the whole of last week, we could see that energy was still lagging because of the drop in the oil price that I just mentioned. And as well as if you were to see right now, technology stocks is moving, as well as industrial stocks are moving. These are the kind of stocks where fund managers actually switch their funds when they are willing to take slightly higher risks. So stocks like industrial sector, technology sector are considered slightly riskier. So when the money is going into this kind of sectors, basically it means fund managers have slightly extra confidence in the equity market. So so this is what basically we are looking at right now. All these sectors are moving together with S&P 500 except for energy so far. And this week we have all the banks reporting. Just before I mention all the banks that will be reporting for this week, let's just go through some of the news that we should be aware of for this week. For the first part, it will be the China second quarter GDP, which will be reported by China. This is supposed to be released on third Friday. So this could be a market mover as well, because it is expected that the world's second largest economy to grow 6.6% in the 3 months ended in June, slowing from a growth of 6.7% in the preceding quarter, which was the slowest paced in a quarter of a century. Right, so that's also showing that the world economy is actually moving slowly, or the growth is pretty small. Now, another main news that we have to pay attention is Bank of England rate decision. The Bank of England will release its rate decision as well as minutes of its monetary policy committee meeting. Because of this Brexit, this meeting could be proved to be a very vital meeting. They could further give a clue on what are they planning to do. Will they be providing extra stimulus in order to support the market due to the Brexit situation that took place? Now, apart from that, the next part will definitely be the quarter earning season kickoff. If we were to look at it, these are the banks that will be reporting for this week. Those banks are JP Morgan, which will be reporting as well as goes to Citigroup and Wells Fargo. These are the three main banks that are expected to report this week. And remember, earnings for the financial sector are expected to drop 5.4% in the second quarter. Thus, I said that the expectation is low. So most of the banks, I believe, should be able to report numbers which are higher than the analyst estimate. So this could actually help to push the market even higher and to close beyond our historical high, which is around 2134. Alright guys, that is pretty much what I have for this week. Remember, market is actually at a very, very crucial moment. Market is actually at a very, very risky situations, because we have a lot of warning signals that are taking place in the market. Despite my call for the market to move higher, remember it all depends on the numbers that are reported by all these companies, especially the banks. The first and second week of the earnings season pretty much are controlled by what happens to the banks. So pay attention to banks reporting, and always remember there are a lot of profits to be made. There are a lot of opportunities in the market. We just have to know where to go and look at which time. All right. Now, as always, stay informed, stay invested. If you have benefited and if you like this video, feel free to share it. So guys, that's about it. Thank you, and thank you.